Josh, the real estate market's a little out of control right now. Spring is sprung and everybody's jumping at the bit. Inventory's still low. I feel like everybody's trying to get that edge, trying to cut corners. What are you seeing out there right now?
Definitely seeing, what you're describing, low inventory, very competitive situations again, and it seems to really transcend towns. I'm actually, seeing aggressive offers in, downtown Boston as well as areas outside of 128. Buyers are really trying to capture that edge to get the seller's attention. I'm seeing very quick timelines. Offer. Purchase and sale agreement might be a few days later, 2 or 3, whereas maybe historically we'd have a week to 10 days for that next contract. Closing, instead of maybe being 45 or 60 days out, might be 3 weeks, 4 weeks, even sooner, depending on the circumstances. Incredibly aggressive.
Let's talk about that for a second.
Sure.
I feel like there's a lot of pressure, especially if somebody's obtaining a mortgage, right? You have to get a loan, and there's certain things that are out of the lender's control to a point. Appraisal, condo approval if somebody's buying a condo, inspection and purchase and sale, etc. So for those moving parts, everybody wants to put their best foot forward in today's market and get competitive and say that we can get it done.
Yeah.
But at some point there's that breaking point, right? You want to make sure that you're not pushing it too hard and setting everybody up for failure. In today's market, I feel like creating a solid timeline up front, unless it's an absolute must to get the deal done, a 30-day window still makes sense. If you can close earlier, great, but at least there's a solid timeline there.
No, I agree with you, and I like you said, there's things that are outside the buyer's control, outside the seller's control on both sides of the transaction that need to happen. Like you mentioned, the buyer, needs to go through, assuming they're getting a loan, they have to go through their financing process. Appraisal has to happen. Condo approval, if it's a condo, has to happen. The seller, they've got to move out if they still live in the property. They've got to get final readings for meters from the town. They've got to get the fire department in to check on the smoke and the carbon monoxide detectors, which some towns that lead time can be a couple weeks. And if people set unrealistic expectations up front on either side, it's just not good for the harmony of the deal. And you might wind up, the downside is, a buyer may wind up needing a few more weeks that the seller won't give, or perhaps the seller needs a few more weeks that the buyer is not really interested in extending, and it can really create a lot of problems down the road.
And listen, I'm coming from the lending side, and don't get me wrong, I mean, can we close a deal in 2 weeks? We can, but I feel like there's that fine line of people just conversing back and forth in anything to get the deal done. What do we need to do? We'll cut the timeline in half and not really understand the consequences on the back end of what actually goes in to the whole process from A to Z. And it's really our jobs as professionals to educate the buyers, especially if it's their first time, on really what goes into the whole process.
And I think the real takeaway from that is it really enforces the fact that buyers, especially people, as you mentioned, who are maybe first time or haven't done it in a number of years, and maybe the systems have changed a little bit, they need to stay in communication with their team before or when they're making their offers. Speak to you about what is your timeline going to look like, what's realistic. Being aggressive is great, but if you can't meet the deadlines and you can't meet the timeline, it doesn't help you.
It just frustrates everybody at the end, for sure.
It frustrates everybody, and it could result in a deal blowing up and possibly a buyer's deposits at risk, and there could be some actual real significant consequences.
So, point taken, structure the timeline correctly and really get input from everybody involved. Secondly, I'm hearing of a lot of contingencies being waived, your typical mortgage contingencies, inspection contingencies. I'm sure you're seeing a lot of that on your end.
Absolutely. And with inspections, I'm seeing more and more people doing so-called pre-inspections, where maybe they bring a home inspector with them to an open house. And obviously the home inspector can't check everything the way he or she would in a normal home inspection. But it gives, some opportunity to go through and I suppose maybe look at some big items, but people are really trying to cut out as many contingencies as they can to make their offers appealing to sellers. That's definitely true.
And in regards to the financing contingency, same thing. You want to make sure that all of your ducks are in a row on the lending side before you just let that go, because that could be a costly mistake.
Absolutely. I mean, with waiving any contingency or with waiving any sort of opportunity for due diligence, you need to really think about it ahead of time, and you need to be prepared to act in the event that unforeseen circumstances come into play. You need to understand that if you don't do a home inspection and you find some major structural problem after closing, that's going to be on the buyer, on you to fix. If you're a buyer and you waive your financing contingency and you weren't well prepared ahead of time and you didn't have all the information from your lender, reviewed as much as possible up front, you may run into some hiccups with being able to get your financing.
It just comes down to making sure that you put together your team, right? The trusted advisors, because waiving a mortgage contingency, waiving a home inspection is not necessarily a bad thing. You just want to make sure that if you're doing it the right way, and making sure that all the boxes are checked prior to signing that document, waiving whatever you're going to waive.
That's exactly right. Just go into it with your eyes open and with the information.
Now, let's talk about costs of obtaining a loan and purchasing a property. We get that question frequently.
Sure.
What actually goes into closing costs for a purchase?
Very simply, closing costs for a purchase would fit really into a couple boxes. So the first is going to be the lender components. So the lender expenses in helping the buyer obtain the mortgage, an appraisal, a flood zone certificate, credit checks. On the attorney side, there's going to be a settlement fee. There's going to be some registry of deeds, some county recording fees for the office where the documents are filed, title insurance, and then there's going to be adjustments to square away taxes, water and sewer bills, refuse, oil in the tank, things like that are adjustments between the buyer and the seller. They're not an impact from the bank or from the attorneys.
You mentioned title insurance. That's a commonly asked question. On the lender side is do I need title insurance, because it's one of the larger numbers on the loan estimate, right? Mm-hmm. So from the lender side, the bank's going to make sure that they're protected. What are your thoughts in regards to owner's coverage for title insurance?
Simply, as you said, the question was, do I need it? The answer is easily yes. Everyone should have it. You bring up a good point. The lender is going to make sure they're protected, right? The lender's title insurance policy, which a lot of people don't understand, its function is in the event the buyer doesn't make their payments, goes into default, and the lender forecloses, the lender finds a title problem. That's when the lender's policy kicks in. The lender's policy affords a buyer zero protection. So a lot of first-time home buyers may think, oh, well, I'm borrowing 80%. I've got 80% of the coverage because of the lender's policy. Maybe the owner's component truly is optional. And the answer is yes, if you don't want any protection, which doesn't make any sense to me. Of course not. It's a major investment. It's a major purchase. And title insurance covers, title defects that occurred in the past. A lot of things that I see, probably 25-30% of the time, documents are indexed incorrectly. For instance, if anybody's ever had their name misspelled, right? It's happened to everyone, no matter what your name is. The registry of deeds system is like an index. So if a document is indexed improperly, it doesn't necessarily make it invalid. Somebody finds it later, and it's going to be something that the owner is going to need to take care of. And the most important thing that I always tell buyers is what they're really insuring is their next transaction. Because your coverage is going to cover you from any moment for any title defect that occurred prior to your ownership. And then there's a number of things that it's going to be forward-looking as well. So if you go to refinance and the mortgage is released improperly, if you have the correct type of title insurance, that issue is not an issue. That technical defect would be covered under your policy. And the impact of that to you is when you go to refinance again, or you go to sell your property, if an issue comes up, you'll have coverage. If you have no coverage that would let the next transaction happen, then the buyer is going to have to fix those items in order to do the next deal. And the risks are simple. You could lose a beneficial rate on a refinance. If it takes too long, you may lose that buyer.
Sure.
So it's really all about ensuring your next transaction.
Great information. Thank you, Josh. And if you'd like to connect with Josh and the team over at Gilmartin Magence directly, check out gmlawllp.com. We have more tips just like this one right here on boston.com.